Welcome to our online buyer's presentation. Thank you for taking advantage of choosing to educate yourself to be in the best position to obtain maximum results. Please allow me to quickly introduce our team. Top left is Tracy Tofty, myself, Patrick Lopez, and Catherine O'Sullivan. We understand that we're finding each of you at a different stage, different place in your desires and what you're trying to determine as far as if now's the time to buy a property. Well, knowing that, let me ask you a question. What does the word home mean to you personally? And I mean you personally. See, the word home means different things to different folks. So ask yourself, what does it really mean to you? What emotion, what feelings does it create for you personally? It might mean security, safety, comfort, family, just to name a few. But understand, it means different things to each and every one of us. Some common questions that we have our clients, such as yourself, have for us is now the time really to buy? What does the local market look like? How hard is it now to get a loan? Where do we personally see the market going? We hope to answer some of these questions for you throughout this presentation. And if we don't, please feel free to just call us direct. At the bottom of each slide is our best number, 661-290-3765. Let's continue, shall we? Over the years, our experience has shown is that there really are 8 steps to home ownership. The first is obviously deciding to buy. Lastly, protecting your investment. What we have found is many buyers start at step number 1 and jump automatically to step number 4. Number 1 being deciding to buy, 4 finding your own home. Well, we think it's very important, and one of the main things we're hoping to accomplish here is explain to you why it's important that you hire your right team, hire the right agent, and also just as important that we secure your financing before we find that dream property. This leads us to asking another very important question. What are your motivations for buying? You see, there are many different types of buyers and many different motivations for purchasing. For example, newly married, first-time home buyer, investor, an empty nester, upgrading, downgrading, relocation, for example. When working with our team, we will help determine your motivation, or as we put it, your why, and help walk you down the path to home ownership. For example, understanding an investor buyer will look different than helping a first-time home buyer. Also, just as important, if you're someone to buy and sell versus buy and hold, there are different strategies depending upon what buyer you really are and what are your motivations for buying. The Results team takes great pride in taking our time in explaining the home purchasing process to our clients. It all begins with a one-on-one buyer's consultation to review the overall market conditions, your specific wants and needs, so we can take this all into account when looking for the right property for you and your family. From negotiations, assisting in scheduling all the necessary inspections involved in the home purchasing process, to making sure you understand all the paperwork. We are 100% committed to assist and answer any questions you may have, any concerns you may have throughout the complete process. We believe that your time as well as ours is very valuable, and that is why we complete a buyer's consultation. This gives us the opportunity to discuss in detail your wants and needs, what makes up your wish list, how many bedrooms you require, baths, styles, and so much more. More importantly, it helps us all to develop a better understanding of what we can or cannot do, so we have a clear expectation on how we will work together to achieve the best results. Now let's review renting versus buying. First, we're going to focus on the advantages and disadvantages of renting. Some advantages are it typically costs less to rent, relocating is typically easier, you have less responsibility for maintenance and no responsibility for repairs. The disadvantages are no tax benefits, no investments in or from the property, there's no equity accumulation, the rent may increase and sometimes very frequently, and there's always the possibility of an eviction. Let's take a closer look at the advantages and disadvantages from a buying perspective. Some of the advantages are its tax benefits as well as the greater stability one typically has from home ownership. Further, purchasing a home historically can be a great investment, and you have the potential to build equity, and your first home may also lead to a better opportunity to trade up to a bigger home at a later date. Some of the disadvantages are the responsibility for paying the property taxes, the responsibility for maintenance and repairs, and the realization that the monthly housing expense may be higher than renting. Also, you should take into account the monies utilized for your down payment and the challenges one may have to sell a home quickly in a slow trending real estate market, which could result in less mobility in ownership than if you were renting. Now, let's start taking a look at what we believe matters most. That is the dollars and cents of it all. On this slide, we're going to break down the financial numbers of renting versus owning over a 5-year time frame. Please note, this is a 5-year time frame and each individual situation is different. Things change based upon one's time frame, down payment, loan type, etc. But we're hoping to give you an idea of how the real numbers look to make an educated decision. Let's take a typical look at a home renter with a monthly rent at $2,300 a month. Typically, the rent may increase by 5% a year, which brings our total rent over a 5-year time frame to $152,460. Now, let's look at a homeowner with a purchase price of $350,000 who qualifies and utilizes an FHA type loan with only a 3.5% down payment. Their loan amount is approximately $341,127. Their monthly payment at a 5% interest rate is $1,831, and with PITI, that is disclosing all the numbers, principal, interest, taxes, and insurance, the total monthly mortgage payment is $2,513.50. So, over a 5-year period, the total payments are $150,809. But wait, as a homeowner, you receive some tax benefits that you do not realize as a renter, so the actual figure after tax figure is closer to $126,931. That could be a potential savings to a homeowner in this type of scenario of $25,529. Now, we understand that each person's situation is unique and the variables may change, and that is why we value the opportunity to discuss each individual's specific situation at the time of a buyer's consultation so we can make an informed decision. Let's now address the cost of waiting. We often hear the question, is now the time to buy? Well, let's take a look at that and what we do feel pretty confident about. If you were to purchase now at $350,000 and put 3.5% down with the same loan as in the previous slide, your loan amount would be $341,127. Right now, at the amazing 5% interest rate, we are looking at $1,831 payment, and with PITI, that's the principal, interest, taxes, and insurance, a mortgage payment total of $2,513.50. But let's say we believe prices may still drop by another 5 to 7% and can now get that same house for $325,000. Sounds great, right? Something you must take into consideration is which direction are interest rates going, up or down. Folks, interest rates are at historic lows, and the belief by many is that they are going to begin to slowly creep upwards. So let's say they only go up 1% while you wait. What does that look like? Well, that same house, like I said, is now selling for $325,000. You put 3.5% down, use the same FHA loan, and your loan amount is now only $316,761. However, your interest rate is now 6%, and your monthly payment is now $1,899. And with PITI, again, the principal, interest, taxes, insurance, all inclusive, you're looking at a total monthly obligation of $2,532.50. So what happened to the total payment? It went up. Nothing shocking, but up nonetheless by approximately $19 per month. Just something you need to consider when you think of waiting may be your best option. Now let's take a look what real estate can do for your net worth over a 5-year time frame. Now we're trying to be realistic here and just take a 4% appreciation rate, something conservative on a historical basis, just because we know right now that's not the case. But let's take a look. After 5 years, your mortgage balance declines to $313,252, and your home value would have increased to $393,702. So as a homeowner, your net worth in this scenario would have increased by $80,450. Folks, that is something you'll never find as a renter. Now let's visit what it takes to qualify for a loan today and I want to stress the word today. It used to be if you could breathe, you qualified. That was kind of the joke. Well, that's not the case anymore. Today's qualifications are very specific and comprehensive. The lender is going to look at your credit report, your FICO score, and the depth of your credit. Some people believe if they have no credit, they are better off than those with credit debt. That's not the case. That is what depth of credit is referring to. Having reasonable debt and paying it on time. The lender is also looking at your employment history, the type of employment, history at that particular job, the longevity, and if there's stability in that type of position. They will also be taking into consideration your collateral. Another way of saying how much money are you bringing into the purchase. Are you putting down 3.5%, 20%, 50%? The lender is looking at what value you are bringing to the table as well as the appraisal report to verify the value of the property. Lastly, they are looking at your debt to income ratios, how much you owe versus how much you make, etc., etc. All these factors come into play when qualifying for a home loan, which is why it is so very important to speak with a reputable loan officer to get the ball rolling. We can definitely help you there. This is a good time to address the changing face of real estate finance. There are factors we can control and not control in this real estate market. This slide highlights some of these items. Controllable factors are such things as having the team approach to buying a home. Your realtor needs to work closely with your lender. You will need to qualify in credit, debt, employment. Property will need to qualify as well based on its equity, the construction, the property condition. But there are some factors that are not controllable, such as market conditions, current interest rates, regulations, guidelines on lending products, banking liquidity, banking portfolios, etc., etc. All these things we need to take into consideration when trying to get a loan to purchase. I bet that's all catching you by surprise. So if you're like most, all this loan information seems just a little overwhelming, right? Well, that is another reason you really need a team approach to get the results you're looking for. We would gladly put you in touch with one of our top-notch mortgage consultants for a free consultation to determine where you qualify today and to design a customized strategy for your home purchase. At your personal and confidential consultation, you will review all the costs, receive the interest rate quotes, and receive a GFE, that's the good faith estimate, on all your loan expenses complimentary. Now let's quickly talk about some of the different type of real estate transactions out there in the marketplace today. It is important to understand the different types of properties on the market. The standard sale is when the homeowner still has equity in the property. There is sometimes more room for negotiations, not just in the price, but in the repairs needed on the property. Typically, these homes can close in 30 days or longer if necessary, but it's all depending on the buyer and the seller agreed to timeline. Foreclosures are properties that have gone back to the bank from foreclosure or such things as an unsuccessful short sale negotiation. Most of the time, these homes are sold as is, meaning the bank typically does not pay for repairs. The importance of a home inspection here, folks, is critical because the bank, who is now the seller, is not going to have a history on the property. And within your 17-day contingency period, you as the buyer can have a professional home inspection done so you can see what, if any, repairs are needed. The short sale or short pay is when the seller owes more than the home is worth, typically has not been making payments, and again, the home is typically sold as is. The seller, the homeowner, is not expected to make repairs on the property. Here, the short sale timeline is important to understand as well. Once an offer is submitted to the bank, it can take 30 to 90 days to determine the lender-approved price. Once the price is agreed upon, escrow is open and the same timelines apply as a standard and foreclosure escrow. If the bank already has an agreed-to price, now what we call short sale approval, and the first buyer backed out, has moved on to another home, or just is no longer interested, the next buyer steps in typically and will not have to wait 30 to 90 days to open escrow. There are many components to making a good, solid offer besides the price, the terms, and contingency. The results team will review comparables in the area to help you determine a fair price. We will access properties within a close geographic area to the home we are considering to look at such things as the actives, the pendings, recent closings with similar square footage, similar amenities to determine what is a fair price to offer. Together with your lender, we discuss terms and conditions. For example, if your loan is a FHA, is it conventional? Are you looking for a 30-day escrow, or is a 45-day escrow better, etc., and any other contingencies that we must take into account. It is very important as a buyer that you understand the importance of your contingency time periods. That is where we at the Results team pride ourselves in doing our best to protect your important items, such as your deposit receipt, while we complete doing our due diligence through such things as inspections, appraisals, disclosures, etc. To elaborate just a little bit more on what is a fair price, since we hear it so often, again, we at the Results team will assist you in determining the fair offer price. Once we are in escrow, your lender will also conduct an appraisal of the property to determine its value. This appraisal will also help us in providing a confirmation of value. So unless you're paying cash, an appraisal will be needed. The Results team will also contact a listing agent to see if there are multiple offers, any previous offers, and any other items felt necessary to better strategize a competitive offer. Besides home inspections, termite inspections, appraisals, etc., there will also be escrow paperwork, items like homeowners insurance needed, and many other facets of the escrow process that we will help guide you through. As you can see, there are quite a few moving components to successfully close your home purchase. Some of these pre-closing responsibilities that we must keep our eyes on are the appraisal, the survey, title search, title insurance. Most importantly, keeping yourself mortgage worthy. Folks, this is not the time to go out there and buy that new car. Doing the final walkthrough. All these things are very, very important. But last but not least, making sure we're successful in the end so we can put those keys in your hands and know mission accomplished. So you made it. You made it to the end. Hopefully we answered your questions. What questions do you still have for our team of real estate professionals? You see, the Results team of Keller Williams VIP, we wish to thank you for your time, and we love the opportunity to represent you and earn your business when it comes to real estate. Our phone number is here on the screen, 661-290-3765, or visit us on the web, 411homefinder.com. We would love to help you and be part of your team to successfully find your home for you and your family. Thank you very much, and make it a great day.